as promised, welcome back. Welcome to this CNBC Africa special. I'm Chris Bishop. Now, if you have a pension or you know someone who does, if you're concerned about what COVID-19 can do to that pension, you stay tuned for the next 15 minutes. On the line, we have a man with his pulse on the pension business. Marais, the head of research at Glaciet, a subsidiary of Sanlam. So there's a lot of fear at the moment, a lot of people ringing up their financial advisors. Just to start off with, how concerned should pension holders be in the teeth of this COVID-19 pandemic?
Sure, it's a brilliant question, and first of all, thanks for having me, and good afternoon. So I think if you take a step back, retirement, this whole experience of transitioning from one period of your life to another period, is already a very emotionally charged event. So psychologically, it's an important event. Secondly, we already know that from a South African perspective, South Africans tend to not save as much. So for South Africans in particular, this is a very, very challenging period. In fact, Sanlam has created a whole retirement campaign around this. So if you add on top of that something like COVID, this recent market crash, it's a very, very difficult period, very emotional. And I think you need to then be very, very cognizant in terms of how you make decisions. It's been shown, and many, many studies have proven the fact that as soon as you start making emotional decisions, it starts detracting from the quality of those decisions. So something to be aware of.
Because that's the thing. I mean, a lot of people are telling me, they're saying, oh, you know, you should be on the phone, you should speak to your financial advisor sooner rather than later, etc. But again, what are the dangers of these emotional decisions that we all make in difficult times?
Yeah, so I think you tend to perhaps zoom in on a particular event. You tend to overly focus on what is happening, and you tend to overemphasize certain things. And one of those things that we typically see in this space is that investors tend to overreact, and they sell out of their assets, and they flee to the safety of cash. And that's not always the best idea. I would, however, point out, you mentioned, being on the phone with your financial advisor, probably a good idea, because you might want somebody that has a different view, that's probably a bit more removed from the whole process unemotionally, to help you through this period. So I think that's prudent advice.
And what about the bitter harvest of these difficult times, and the fact that a lot of people are losing their jobs? I spoke to a lot of people as well who are actually cashing in their pensions now just to pay the bills. I mean, how does the pension industry survive in such times?
Sure. I mean, that is obviously a very difficult thing that's going to happen as people start losing their money. Or their jobs, for instance, they lose their income, and they will need a source to finance a lifestyle. That is going to be a difficult period for the pension fund industry. Although I believe that that might not be the majority of instances, and that we will survive this crisis, and that people will start working again. We've actually had this same problem before this event. There's a lot of people that's unemployed in South Africa. And that is a huge concern for the entire industry, but also from a social perspective for the country, especially when you then transition into a period where you can't actually work.
If you do have the money, or you're lucky enough to have cash in your bank, what would you advise people to do with it if they're looking to retire maybe in 5-10 years' time?
Well, first of all, I would say that stay the course. You should have hopefully you should have a plan. If you don't have an investment plan, you should definitely get one. That plan should be focused on delivering good returns, focusing on delivering those growth returns, staying the course. I certainly would not think that you would hope that you don't in the next 5 years maybe transition into a portfolio without any growth assets. It's going to be really, really important to have those growth assets to deliver those returns. We see it now in the cash market. Interest rates are falling rapidly, so your expected returns that you start off with is already very low, and that means that you need to have a decent chunk of your portfolio exposed to growth assets.
Because that's another point. I mean, like some interest rates in Europe, they're in minus territory already. It's 3.75, the repo rate here, and it's on its way down. There's going to be another cut in July. That's bad, surely, for growth and long-term investments that you're talking about.
Well, so typically when you see your short-term interest rates declining, that's actually very good for your growth assets, because that means that your future income streams are discounted at a lower discount rate. So that means that your current values of those assets should rise. But yes, it does. I suppose it does point to a period of low growth that one should expect. Indeed, that you would also expect lower inflation. So don't forget about that. But that is the point, that you should have a well-diversified portfolio with different income streams, and possibly not only focused on a particular market, geographical region, but also maybe globally.
And a lot of people, so one of the questions from one of my colleagues is, a lot of people were saying many years ago, there were adverts everywhere on the radio, etc., saying, no, offshore. That's the way to go. That's the way to put your pensions, etc. Put a bit more in, you get a dollar pension. Is that still an option in these difficult times?
So, I mean, the currency is obviously always a very, very difficult a call to make when you do decide to invest offshore. I would say that if you were invested 5 years ago in the offshore space, you would have that would have been very, very good for you, because the offshore market, yes, they've also gone through a period of some drawdowns, but with your currency depreciation, that assets is actually held up well. And remember that also offers a diversification just from a correlation benefits to local assets. But also, I think the point of offshore is not always just, yes, you externalize into hard currency. It's also that there are many different business models, exciting business models from a technological perspective, from a health perspective, that we simply don't have in South Africa. So I would say there's many arguments to have an offshore diversified into offshore investments. Difficult to call the currency. I would say that should be part and parcel of any portfolio. So you should consistently be buying offshore assets. Obviously, it is not important to, with current rand weakness, to externalize a lot at this particular point in time.
And again, on the more positive side, if you do have a bit of extra cash, and the other thing I was going to ask you, everyone's talking about a rebound in the markets now. Is it perhaps a time maybe not to panic, and maybe 3 months, 6 months, people might get back, say, up to a third they may have lost in the last few months in their pensions?
Yeah, sure. What we've seen in this drawdown, it's been quite severe, and it's the speed of how this happened was very quick. We've already seen quite a good comeback during April and May, so keep that in mind. It's anyone's guess. I don't like to partake in trying to predict what's going to happen in the markets. I think you need to keep an eye on fundamentals. I think there's a lot of things that you need to consider in terms of businesses and their income streams going forward, how the economy and this lockdown is going to impact on that. But I would say that would probably be over the short to medium term. Longer term, though, there's lots of fundamentals that should be improving. We probably are at the bottom of certain things. Yes, there might be some pain to come, but then things should start improving. We see massive fiscal stimulus coming through, monetary stimulus coming through. So these are all conducive for better times eventually. And you should keep your eye on the long term in these situations.
I was reading an interesting story on the wires yesterday, saying that maybe for long-term investors, one of the best places right now to invest in is the quote, worst stock exchange in the world, the Brazilian stock exchange, because the stocks are so low at the moment. If you buy them, A, it'll be very cheap, and B, the only way is up. What would you say to somebody who came to you with a plan like that?
Yeah, well, if you have a lot of money, your capacity to take on a risk is probably different to people that might not be that fortunate. So I would always say, be cognizant of diversification. Don't overexpose yourself to any particular risk factor. And Brazil, that's a deep value factor that you're exposing yourself within a very particular geographical region. So I would say it's interesting if you have a lot of money, by all means. But if you don't, and if you are like the rest of us, be careful of going that route. Yes, asset classes are definitely cheap, and it has shown that over time, if you buy something that's cheap, bearing that the caveat here is that the fundamentals need to be there to unlock the value, then by all means, it should be a good investment. But don't overexpose yourself to a particular risk factor or geographical area.
Sure, and another factor as well, particularly, well, I can almost say peculiar to South Africa on the continent, is the fact that this has gone on record many times in the past as one of the countries with the least number of savers, where people live on credit a lot. I mean, where does that leave us in this pension crisis we're facing?
That's a great question. I think what many of the conversations that we tend to have in the industry is all about post-retirement, and that is very, very important. But we're trying to treat the symptoms here, and we're trying to give solutions after the fact. And this thing is actually solved in the pre-retirement, the accumulation phase, where people simply need to start saving more. Not everybody, unfortunately. We have deep social problems in the country, so it's not feasible for everyone to necessarily put a large chunk of their money away. But it's something that South Africans should seriously start to reconsider in terms of how we spend our spending habits, and probably to start saving more. I think COVID has exposed the fact that this whole idea of having a reserve fund is actually very, very important. How quickly are people faced with 3 months without work or without an income stream? So I think savings is going to be top of mind a lot more. And I think that's probably what be one of the long-term benefits of what we are going through, is if we can change that behavior for people to start saving a lot more.
But how much an uphill battle is it going to be? I mean, I was just seeing one of the big fund managers being quoted here. He was saying formal retirement fund market has seen net outflow like for more than a decade, because ever since the crash, obviously, in 2008. How is the pension industry going to carry on with that level of funds flowing out?
Yeah, so I think our pension fund industry is made up out of a lot of different players, right? And I would say in the defined benefit space, it's obviously very different to defined contribution space, where we see a lot more people saving. And if money is flowing out of that, then it's going to be to the detriment of the eventual retiree. So yes, that is true. I still think there's a lot of managers, or the industry as a whole is still very stable and healthy. It's something that we contend with in terms of a lifestyle behavior, that people are probably not saving as much as they should. They're spending a lot more. And that is a behavioral change that needs to happen, because ultimately that is to the benefit of the retiree.
And again, what about people? We've said maybe offshore because of the currency could be an option. What about people actually moving large-scale funds offshore to shelter from some of the decline in the rand? How could that weaken the business, you think, in the long term?
I think it will lead to healthy competition. I think that the more your opportunity, the larger the opportunity set for investors, the better for the end investor at the end of the day. The industry will have to adjust. Bear in mind that a lot of the big asset managers in our country already has established businesses offshore, so they can also benefit from that trend. But I think it's healthy. The competition is healthy. We encourage that when people do externalize assets, to also consider some offshore managers. So I think it's ultimately healthy. It's good from a competition perspective, and that can only lead to the benefit of the end client.
And just one last question for you. We've spoken about a lot of depressing issues, I think, in the last 15 minutes, but nevertheless, issues that have to be tackled. Just give us pension holders a bit of hope to finish off this discussion. I mean, what is the upside of the terrible situation we're facing?
Look, we're probably in the eye of the storm at the moment, and things, it's so bad that it can only get better from here on out. But I think, from a longer term perspective, keep your eye on the ball, keep your eye on your plan, make sure that you regularly do speak with your financial advisor, that you are on top of what's happening in your own investments. It can't just be outsourced and you're not aware of what's going on there. And I think over time, growth will come back. Businesses are exist to generate profits and to fulfill a need in society. It's not like businesses are going to stop existing. So there will become a time when we speak about this as history, things will improve, and you should get decent returns going forward.
Thank you very much indeed. That was Francis Marais, the head of research at Glaciet, talking about your pension, COVID-19, what you should do, maybe it's what you shouldn't do. I'm afraid we've got all we got time for on this CNBC Africa special. From me, Chris Bishop, and the team, it's goodbye.